general insurance. When we start this section, you're going to realize that, wow, there's a lot of definitions. There really is. Every industry has their terminology, so you want to be familiar with it, you want to be comfortable with it, so that you can answer questions, of course, correctly. There's also concepts, a lot of theory and concepts. I will tell you, a lot of what you're studying and will be studying is based on contract law. The reason is all policies of insurance, regardless of what kind of insurance it is, they all follow contract law. So that's why sometimes the verbiage may feel a little convoluted or awkward. It's because it is actually legal language that is used because insurance policies are contracts. Okay, so let's get started on the very first, simplest definition. What is insurance? Any kind of insurance. Insurance is simply the transfer of risk. You as an individual, if you don't buy an insurance policy of some type, you are making yourself solely responsible for managing and handling the burden of a large cost. It can be very, very nerve-wracking. So that's why many people buy insurance. It's to transfer some of that risk to the insurance company, who insures large numbers of people, and that way they can offer you a competitive, price on your insurance. But the simple, straightforward definition for what insurance is or does is it is the transfer of risk from an individual to the insurance company. You pay them a premium, and they are contractually obligated to pay a claim as long as that policy is in good order. Types of risk. This is oftentimes a test question, and that's what insurance is all about. It's all about risk, right? So there's two kinds of risk, actually. There's pure risk and there's speculative risk. Pure risk is the only kind of risk that can be insured. It means that you only have a chance of loss. Whereas speculative risk, you could have a loss or you could have a big gain. Think of going to Las Vegas and gambling. That's speculative risk. You could win big, right? Or you could lose everything you came with. So that's speculative risk. You can never insure speculative risk. Only pure risk. Make sure you know the two. Let's talk about the different types of hazards. First of all, what is a hazard? A hazard in general is something that increases your possibility of having a loss. So the first type of hazard is a physical hazard. For example, you've been smoking since you were 14 years old. You've been putting yourself at more risk because of smoking. You can have health problems, you could shorten your life, all of those kinds of things. And that's something physical that you've done, right? So that is a physical hazard. Another type of a hazard is called a moral hazard. M-O-R-A-L. Pay attention to the spelling. A moral hazard is really related to an individual's moral or ethical code. Did they lie on the application? That would be an indication that there's a moral hazard here, and it could put the insurance company in an awkward position, right? So you always want to be careful that people are being honest when they are taking out an application, or they might be presenting a moral hazard, M-O-R-A-L. Another example of a hazard is a morale hazard. Again, watch the spelling, M-O-R-A-L-E. There's a difference between moral and morale. And in the stress of the exam, you might read one word for the other. So slow down, read carefully. We're going to talk here about a morale hazard. Morale hazard is more along the lines of a mindset. A person is just of the nature that they know they're supposed to take care of themselves, not take extra risks like drinking and driving. That increases their chance of having a loss, right? But they don't care. I've got insurance. I can do anything I want. You can be reckless. You can make poor choices. Oh, because the insurance company's there. They'll pay the claim if something happens. That is a good example of a morale hazard. So remember, you've got three kinds: physical, moral, and morale. The relationship of a peril to a loss. First of all, what is a peril? Peril is described or defined as the cause of a loss. It's the reason that you lost something. For example, life insurance, the cause of the loss is death, right? On, say, a medical expense plan, it could be sickness or accident. That is the peril, the cause of a loss to you. Okay, so that's what a peril is. There is a progression here and how it all connects together. We start along this progression with hazards. Remember, hazards are conditions that cause you to have some kind of a loss. And a loss is caused by a specific peril, such as death is a cause of you losing your life, right? You died, you lost your life. Now, what does a loss do? So loss is defined as a reduction in value. You pass away, the value of your life is totally reduced to zero, correct? So it would be the basis for a claim. You pass away, your named beneficiary on your life insurance policy will file a death claim with the insurance company to notify them that you have passed away. That's the process that we go through. The insurance company receives that claim, they process it, and because you, the insured who passed away, had prepared for this kind of event, you have transferred some of the risk of you dying prematurely to the insurance company, and now they're going to turn around and pay that death benefit to the named beneficiary of your life insurance policy. That's the flow of how this works.